Hi guys, welcome back to the Max Spence Business Podcast. Today I have a very special guest. His name's Neil Greenbaum. He's actually owns his own law firm. It's great having you on, Neil.
Thank you so much for having me, Max.
Awesome. So Neil actually does, commercial law and also business law. So why don't we jump with a little bit of intro about, who you are, where did you grow up, and what got you into real estate and also law?
Sure. So I'm from New York originally, and I went straight from college into law school. Then I worked at one or two law firms, but I was always entrepreneurial. So I started a few companies back in my 20s and eventually was in real estate development. And I've been a lawyer ever since. So I do that as well.
Okay, awesome. So I want to actually talk about your first company, a foundation source. Do you mind going into a little bit more into depth with that? And how old were you actually when you?
That's a long time ago. That's a long time ago. I don't know how old you are, but it's probably as old as you are, or maybe a little younger.
Yeah,
anyway,
yeah, probably. How old were you actually when you started it?
I was already. I was 30 already. I'm an old man, so yeah.
Oh.
So back in the original .com boom, like 98, 99, 2000. What that company does, what we wanted to do was, if you write charitable donations, at the end of the year, you have to get receipts. So if you write a lot of charitable donations, you have to get a lot of receipts. So it would be much more efficient if you just had your own foundation. The problem with foundations is it costs a lot of money to make one. So we had a concept where we were going to create these e-foundations. Back then, everything was E in that first iteration of the .com boom, like eBay, etc. So we were going to have people be able to form their own foundations online and then just write checks from the foundations. And what we wanted to do is wanted to go back then to like the investment houses, stockbrokers, which I know is an old word. I wanted to have them sell it to their clients. And what happened was there was a pivot. Instead of doing that, what we wound up doing is we just became the back-end administrator for all these banks. So the banks were actually our clients. And this company is actually still around. It's 22 years. I actually finally got a check this year from them, which took a long time. But unfortunately, we were supposed to sell it 20 years ago, and it didn't happen. But anyway, the company has, I think, like $4 billion under administration. It's still going concern.
Wow, that's incredible. And you started that. So was that after you started your sort of practice in law and working at law firms? And then did you?
I was already a lawyer for a bunch of years at that point.
Okay. And did you start this while you were actually in law, or did you actually leave and then start this company?
I worked at the company full time. So it must have been, it was between law jobs. I did this with my brother and one other person. We started this company. I worked there full time for like 2 years.
Oh, okay, awesome. And then, that's actually pretty interesting. So, and then what made you, so when you first got into law, were you in real estate law or were you in business law, or what sort of made your transition?
Originally, I was in something totally different. I was in trust and estates, which is like wills and estate planning and stuff like that. But I was not such a big fan of that. And I was young. I went straight from college to law school. So I wound up gravitating more towards business and real estate afterwards.
Oh, okay. And okay, so then you got into real estate. And what made you actually sort of get into real estate law and get into, because I also know that you were the principal of an investment firm that has done some pretty noticeable stuff with development of like, I believe it's 3,000, residential units, and then also 500,000 5,000 square foot space, total volume of square feet.
So,
yeah.
Right. So my grandfather was in real estate. He was an immigrant. The usual success story, post World War II. But what it was is in the early 2000s, my brother and I saw in Florida things were happening in the condominium market was starting to take off, and this is obviously way before, thankfully, that economic downturn, like 2007, 8, 9. And it was fairly, I don't want to say it was easy, but it was not difficult to find properties back then. A lot of people weren't, right now everyone goes to Florida. It's hard to find properties. But back then, not that many people were going. We're talking about almost 20 years ago. And so we went down there, and the whole point of doing condo development is that if you buy an existing multifamily and you break it up, it's worth more money. So, the parts are equal, greater than the sum that you paid for it. So we would buy a multifamily, let's say we bought a 200 unit multifamily garden apartment complex, and we'd go in there and we'd do upgrades, and we'd sell condos. We get condo docs, it has to be approved by the state, and we'd sell condos to the end users. And we had a joint venture with a lender. So what we would do is if you had a grand opening, people would come, they want to buy right then and there, they got a loan. Now, listen, this is, before the downfall of the economic crisis in the banks. And it was easy to think about loans. They were giving out, money for free back then. You get 100% on the dollar, 100 cents on the dollar. But it worked for a while. I mean, that was the go-go days of condo development, which actually doesn't exist anymore.
Wow, that's that's awesome. I sort of want to jump now to, so you're in your investment real estate for a while, and then you sort of went back to, were you always sort of, through that time, were you always sort of doing law, like even at that investment, were you like more of the investment side of analysis and stuff and finding the deals?
I was always at the general counsel. So I always did the legal end on all that stuff.
Okay, and then what made you want to start your own law firm instead of, or are you still working with Hudson?
No, I'm not working in that anymore. So what happened was, after the economic crisis, I said, you know what, law is something that, it's a little more recession-proof than some of the other things. So I just started to do more than I had in the past. I still have real estate and I still work on other things, but it was just, I gravitated towards something that was basic and general.
Okay, awesome. So I want to sort of jump this podcast to actually, so I want to talk about a little bit more multifamily law and giving advice to people that are interested in, investing maybe into multifamily or commercial real estate, but there may be a new investor, maybe they have a few residential properties already, but they don't really know the legal aspects of, commercial law and all that sort of stuff. So I was wondering with, an LOI, sort of the beginning steps, what are some things to make sure that you're protected with your LOI, and some things to have in it?
So it's funny, I was on a panel last night and about commercial real estate, and I'm not a big fan of LOIs. I don't think they're very necessary. An LOI is not a binding contract. It's an agreement to agree. So it doesn't really do anything for you. The only thing that might be binding in it is either the confidentiality aspect, or there's a no shop provision where the seller can't shop it around during the LOI term. An LOI is just basically a way of putting the bullet points, like this is going to be the deal, and now we're going to do a contract, and the contract's going to be binding. So an LOI sometimes isn't necessary, especially if you're spending time and money on drafting the LOI. It's not binding. You still have to have a contract, a PSA, a purchase and sale agreement. So it might be a good way of getting your bullet points and the deal points down, but it's not necessary. It's not a necessary step in the purchase of commercial real estate.
Okay, yeah. The reason I was interested in the LOI is that I know that it might be different for different locations and how different investors operate, but I know in Ottawa, some of the investors like to use LOIs just to be able to do volume, to be able to put like, not offers, but more see if the seller has interest in selling, and sort of be able to give out a lot of them instead of setting purchase and sale agreements. What are your thoughts on that?
I understand that because it's a non-binding offer. That's why they do it. Because if you send an LOI to a seller and he accepts it, you have a non-binding offer. And if you put in there that the seller now can't shop that deal around for 30 days, it gives you 30 days to put together your financing and some that while you're, while you're agreeing to the terms of the contract. I understand from that perspective why people do it. Because if you make an offer, otherwise in writing, it's a binding offer and you're going to get stuck. But if it's an LOI, it's really an agreement to agree. So I understand why they do it where you are.
Oh, okay. So what would be a better thing to do then from your sort of side and your sort of point of view for somebody wanting to put in an offer in?
I'm not saying it's better. I'm saying that it's the reason LOIs exist is because they could make the contract drafting portion more streamlined. That's the whole purpose. Because otherwise you can negotiate a commercial real estate contract for a month. And rather than do that, if you have an LOI that has all the major deal points in there, and that makes the contract stage more efficient and easier, That's why people want to do the LOI. So I don't have anything against it. I've done plenty of deals where I can't remember the last LOI I did. I haven't done an LOI in a while. So I've done the last couple of deals without an LOI.
Oh, okay, okay, that's interesting. So you just went straight in and just put, you know, like a purchase and sale agreement offer into for that property then.
So the operator, let's say the buyer, I do mostly the buyer side. The buyer will come to me and he'll already have a purchase price with the seller agreed to, and the seller's attorney will send me the contract, and we go from there. I send it to the buyer. I always involve the buyer in the process. You can't just hire an attorney and walk away, because I always believe that if you're an operator, you have to know the deal as well as anyone else. So you should be reading the contract and you should understand what you're getting into. And then we just negotiate the contract and it gets signed, and the transaction proceeds accordingly. But I don't use LOIs that much. Some people use them exclusively, but I happen not to. Just what I do, I don't use them that often.
Oh, okay, okay, okay. So what do you want to talk a little bit more about, like, so you've done quite a bit in real estate. How did you actually get into doing some of the bigger deals that you've done? How did you sort of get into that space? Did you already have quite a bit of knowledge of your own personal background of investing your own money in real estate into like commercial real estate, multifamily, office space, all that sort of stuff? Or did you go out and like raising capital and then purchasing properties?
I learned on the job. We went out and raised money. We raised money, and I did mostly multifamily. There were some retail components or office components, but we raised money through investors and who took equity in deals, and that's how I did it. I didn't. Sometimes you have to jump in. I just jumped in.
Oh, okay, awesome. So was your was it a syndication, or did you do more of like a partnership agreement with it?
More of a
Partnership agreement. Okay, so how that ran with it was, because I'm not too familiar with law that much. So with the partnership agreement, did you have, like, when you were going out raising capital, how many? Well, it depends on the deal, right? How many people you had to raise capital from? But did you focus on raising from a few people, or did you have more of a broad spectrum?
No. First of all, too many chefs are going to spoil. Are going to spoil the broth. The problem with too many investors is that it's you don't want to be getting drips and drabs. Let's say let's just for example, you want raising $1 million. You don't want to raise $50,000 from 20 people. It's too, you're better off getting $1 million from one person or 500,000 from two people. So we raised money from large investors, and after a while we had institutional investors. So we had institutions who were giving the money. When you have too many investors, first of all, it's going to be, if it's a syndication, you have securities issues. You're selling a security, and I try to avoid that. So it's better to have a handful of investors and have them there from the beginning. And the less opinions and less investors, the better off you are.
Oh, okay, yeah, that does make sense. So how did you actually go about finding these and networking with these investors and finding these high net worth individuals to actually come in on the deal? Did you already have them in your sort of circle, or was it, did you actually have to go out and solicitate different, networking events, or how did you find them?
I'm trying to think back. So I had partners. So between the partners and myself, we knew enough people to start it. I mean, look, networking is key. I mean, if you want to be in the commercial real estate business, you have to know all the parties, and it's important to know investors. It's important to know brokers. It's important to know attorneys. It's important to know title people. I mean, this is, your network is important. You can pick up the phone or send an email to someone you know, and they can help you facilitate a deal. It makes it that much easier.
Oh, okay, awesome. And then I sort of want to talk about is, like, I saw from your from your LinkedIn that you guys actually scaled pretty quickly in, like, the commercial real estate from when that company. Well, I don't know if there was a previous company or anything like that, but if that was the only company that had the real estate assets under it, that scaled pretty quickly to over I think it was over $1 billion in real estate.
Well, it was a different time. Let's put it that way. It was easier then. It was before the economic downturns. The laws were different. The banks were much more giving. You could borrow more on a property. And if you were able to close, you were taken more seriously. We were able to close. We closed on that first deal we wanted to do. And because we closed on the first deal, I'll tell you an interesting story. On the second deal we did, we got a call from, I think the broker was CBRE, who we dealt with on the first deal. And we were not even the top bid on the second deal. But because we proved our ability to close, the seller went with us and we closed that deal as well.
Oh, wow. So, okay. And were you like, so like the people, like how big was your team when you guys started the company? Like five of you?
People.
Okay. So you were like so you were like the main legal guy on the team. What were the other four guys?
Acquisitions, financing, management, everyone had a role.
Oh, okay. And then were they sort of around your sort of same, like, did you guys all grow up together or how did you guys sort of meet to build that team?
Most of them grew up together or grew up in a similar way.
Oh, okay, okay. And then you decided to start that company. Okay, that's pretty interesting. So what was actually the first deal that you actually did with that company?
It was in West Palm Beach, Florida. I think it was like 200 units.
200
And
units.
yeah, and we bought it and converted it in probably within 6 months. I mean, listen, the condo market isn't the same anymore, so I wouldn't recommend people try to do condo conversions. It's not. It's now most people who are going to buy multifamily are going to hold multifamily, and they're going to try to do value add and just hold it and take the cash flows out of it and wait for the appreciation. But back then it was a different time, and you were able. The important thing that doesn't exist as much anymore, and I understand why in hindsight, is that if you're selling units to end users, they were able to borrow money and close immediately. And that's the key to that business. That if you're converting a multifamily rental into a condominium, you want people to be able to buy it from you and to not have a problem closing. And people were able to borrow money then. I mean, that's probably partially what led to the crash, in that people were money was too easy. So, but yes, it was easier to scale back then in terms of what we were working on.
Okay, yeah. What I find really awesome is that you guys jumped straight from, you guys didn't even do 0 units or anything like that. Like, have you invested in real estate previously, or was this like you just guys jumped into 200 units?
So I had not, but one person there had. And like I say, listen, it's just as hard to buy sometimes 2 units or 20 units than it is to buy 200 units. It's just another zero, or so it was just, yes, it was a quick jump into a lot of units, but that's what made sense at the time.
Oh, okay, yeah, that's crazy because it's very rare that like I've networked with quite a few real estate investors in Ottawa, and very few of them like, well, a lot of people don't usually just jump to like the 200 unit mark very often, just because a lot of people have this they have a conception that you got to start with like your single family or something like that before you can jump into commercial real estate.
I don't believe that. I mean, if you think about it, you have to start with a single family. Why? And then go to 2 family and then 3 family. By the time you get to 100 units, 30 years will go by. I don't know how necessary that is. Yes, from a management standpoint, it's very different, and from the cash flow, and you need more money to invest. We had a problem with that first. I remember we had a problem with that first deal. The management company was supposed to stay on, and they quit on us like right after closing. So we had no management. Yeah, so we had to go hire somebody else. I mean, obviously, when you deal with 200 units, like you can't split it between 5 guys going around fixing toilets and stuff. It doesn't work that way. You have to have real management, on site. But I don't necessarily believe that you have to buy a single family home first, because the experience in a single family home is completely different from the experience in owning, let's say, a 50 unit building. So you're not going to necessarily learn from a single family how to do, multifamily.
Yeah.
Also, when you're buying a single family, your risk is far greater. You have one bad tenant in a single family, you're done. You're not getting rent. Your sole source of income doesn't exist anymore. If you have a 2 family and you have one bad tenant, 50% of your income is at risk. If you have 50 units, you have 3 bad tenants, you're talking about a small percentage. So it's just different. I don't believe it's necessary that you have to buy a single family first in order to get into multifamily.
Okay, so when you actually got into that, how like, because a lot of people, maybe the majority of people probably don't jump into it because there's the uncertainty and fear and stuff. Like, how did you manage your emotions with all that, with jumping and never doing 200 units, and then next thing you know, doing 200 units?
Well, it's scary because the dollar is involved. And my son, the dotted line, when you owe the bank everything, you owe the bank everything. Yeah. I mean, listen, there's the risk inherent in almost everything you do. So if you find a good investment that you're going to have to sign on the dotted line for, and you're going to put yourself at risk, it's a big jump. But listen, the risk takers make money. The thing is that, remember, I had partners, so we kind of split the risk. So it was definitely helpful. Doing it yourself is totally different. But you know, in my mind, if it was a good property, it made sense for what our plans were, and it did, then it was worth doing. But some people hem and haw about single family also, right? So it all depends on the person's perspective and their tolerance for risk.
Okay, true. So I heard you mention, is your son in law as well, or is he in real estate?
No, my son works for investment, for a hedge fund, actually.
Oh, okay, cool. So so all right, awesome. So then you started, when you started, I want to jump to your firm now. Sorry, we're jumping all over the place. It's just don't have much time, and you're a pretty interesting guy with what you've done up to, you know, this point in your life, with a lot of different areas of a lot of different aspects. So with actually starting your law firm, let's say for somebody who's at a pivoting point in their career and they're interested in starting their law firm, what were some big things that, you know, you had to keep in mind when making that jump into starting your own law firm? Was it like making sure that you had your, you know, a good amount of clients, or networking, or with marketing and stuff, or building that good team at the beginning of, you know, the 3 to 4 people that are going to really help you run that business?
First of all, I run the business myself, so it's just me.
Oh,
Yeah, it's as lean a business as you can imagine. It's just me. If I have anybody helping me, they're virtual. Way before COVID, for like the last 5 years, I've done everything virtually: Zoom, e-signature, wire, credit card. Everything's in the cloud. I don't have any papers. I just take my laptop and walk. But the important thing, I think, when it comes to starting a law practice, is pipeline and clients and cash flow. Because that's the lifeblood. You have to, if you have a good pipeline and you have the clients flowing in, you're going to have the cash flow, and you keep your expenses down. I do transactions, so I don't do litigation. I don't have a lot of heavy paperwork here. Yes, I do contracts and stuff, but I do most of that myself. And I am old school in the sense that I'll print out a contract and go over it with a pen. But after that, I rip it up and throw it out, and everything is redlined. Everything's on the computer. But I think in any service business, where you're offering a service to the public, or B2B, I think it's important to have a pipeline and a good, you know, you want to have a pipeline of clients, because that way you have the cash flow there when you need it. That's the most important thing. And networking is important. And I do all my marketing on social media, and it works for me. You know, you have to put your time in, though. It's a long game. It's not like you're going to, you know, get a LinkedIn account and you're going to print money the next day. It doesn't work at all like that. But you have to put it's a long game. You have to, you know, you have to post and engage and give value, as I say. And I think if you have a good plan, it works.
okay, awesome. I actually, I heard something interesting at the beginning. So you're very lean, like your business is very lean right now with just you. I can't remember what I was listening to, but it was another entrepreneur, serial entrepreneur or something, was saying that in the future they're going to see that, well, they believe that a lot more people, like a lot more companies, are going to slim down in size, and they're going to be, and the transaction of outsourcing is going to become so efficient and useful that companies are going to be operating really lean, and a lot more people are going to I heard it on Joe Rogan podcast. I can't remember the guy's name. Anyway, but what he was saying, he's an angel investor, and he was saying that it looks like a lot more people in the future are going to be more entrepreneurship. And that's what I've sort of seen at my generation as well. So the early, you know, I mean, early 20s and stuff. So what are your sort of thoughts on that? Do you think a lot more businesses are going to become a lot more lean and with how they operate?
If they're a service business, I think it's the only way to do it. Unfortunately, COVID has taught us that with certain businesses, let's say retail, you know, I don't say I'm speechless, but like with retail, if I was in the retail business with COVID, I mean, it's a massacre. You know, it's terrible. In terms of my business or any other service business, listen, I don't have any employees. I'm the sole employee of my business. And when I need help, I outsource everything if I need it. And it's very easy to do nowadays. And you can work from anywhere if you're giving a service or if you're selling goods online. And you can outsource all the things that I'm like. I outsource accounting. If I need help on something, I outsource legal work to other people. When you call and I can't answer my phone, it gets outsourced to a virtual receptionist somewhere else, and they answer the. So that is the future, I think, and it's easy to run a lean business that way. And with the cloud, I mean, you don't need a computer that weighs 50 pounds anymore. Everything's in the cloud, and the way that payment and money moves, I take most of my payment is credit card or wire or e-check. I don't even need any physical paper. I don't have to go to the bank for anything. And the way things are nowadays, if somebody does mail me a check, which is so rare, I just take my iPhone and I deposit it right there. So I think in terms of running a lean business, if you want to be in a service business or a business that's, let's say, a site that runs online, it's extremely easy nowadays, and every day it gets easier. There are more and more applications and more programs and platforms that you can be on. And I recommend that if you're going to be in a service business, lean is the way to go. I have a friend who is a law firm, and he has 15 attorneys working for him. He probably has like 20 support staff. And he says, like, every month he has a big nut. He has rent, and he has payroll, and he has benefits, and he has this. And it's just a totally different process from what I'm doing. And part of me thinks that he has it better, and sometimes he thinks that I have it better. It's just, I just think that from my perspective and the way that I work and the way that my life is, that it pays to do things the way I do. And in terms of outsourcing and being lean, it's just easier now than it's ever been before.
Yeah, that is pretty true. A lot of people think the grass is always greener on the other side, and sometimes it's not. So let's say, so when you got out of university and you went and worked at a law firm. So today, with the amount of information that's out there with like YouTube and Google and how much you can learn, and with social media and like building a brand around yourself, do you think it's very viable to come out of university after you get your law your law degree and start your own practice, like your sole man practice, and start rolling with it? Or would you say is it better to go work at maybe a bigger law firm or a smaller law firm or more like a niche law firm? Or what are your sort of thoughts on that?
It's just my personal opinion, obviously, but I would definitely go get a job. I think you learn a lot on the job. You're learning on somebody else's dime. You have a lot of pressure when you work for yourself. I mean, it's all on you. Okay. So let's say you're coming out of law school. If you have debt, then I don't know how you possibly do it. It doesn't make any sense. But I would get a job at the best firm you can, or try to figure out what type of law, if you know what type of law you want to do, which many people don't, but if you do, then you go try to get a job in that. I think it's always good to work for somebody else when you get into a certain industry. That's how you learn. And you're when you work for others, especially a bigger place, you're able to work on things that you would never be able to do by yourself. So
okay.
I would never recommend doing it right out of law school. That's my opinion. A lot of people, they don't care. They're just going out on their own day one.
Okay, so with actually working with somebody else, would you recommend working at maybe a larger, like a more established firm, or maybe a smaller firm, like a more boutique size type of firm for better, like, what would you say from your experience, what is giving you the most experience sort of options and sort of to help you forge your path forward?
I think you're going to learn more at a smaller firm, but there's a lot of prestige in working at a big firm. And you put something on your resume that's always going to be there. So it opens a lot of doors for you. So I think if somebody can get a job at a major firm that's, they call it big law nowadays, that has a name brand, I would definitely do that. Because even if you only do it for a few years, you did it. You have it on your resume. It's not going anywhere.
Okay, yeah, and then whatever you do forward, people,
it opens doors for you.
Okay, yeah, that is actually pretty interesting. So, from what you've seen when you actually started networking, you must have already had, like, did you go work at like one of the bigger firms, or you've already had some entrepreneurial experience, so you already had sort of a level of prestige when you started networking, that people, when you approach people to, either for capital raising or for business opportunities, they already know that you were, a very capable guy.
Well, I don't know, maybe. I did not work at a big law firm. I worked at a large bank first, but I'm doing this for a very long time. So it's also a track record and knowing people and doing things. So that, if you're 25 years old, you can't have that much of a track record. You just can't, So at that age, I would learn everything I could and work for other people. If you want to get into commercial real estate, you could always go work in commercial real estate before you do your own deals. I mean, why not learn how to do the deals first while somebody's paying you a check and you're not taking any risk? But in terms of networking, it's always good to have a good network. And for me, social media, I use LinkedIn practically exclusively, and LinkedIn works for me. And I think it works for most people. I think you can find whatever you want because everybody's there for the same purpose. Everyone's on LinkedIn to advance their career or their business or whatever. I don't want to say just make money, but it's essentially that.
Yeah.
But so it's easy to network now. I mean, look, we're 1,000 miles from each other, let's say, right? We're talking the same. You couldn't do this when I was your age. This didn't exist. So it's just much more. It's a much smaller world and things are easier.
Yeah, that is very true with the internet and YouTube and Google, how much people at a much younger age are able to do a lot more than 20 or 30 years ago, because all the information was more held at big law firms or banks or whatever, right? All that crucial information, whereas now today is like you're able to Google every answer you ever think of and you can get a pretty good response to it.
There is a danger to that, though.
Yeah.
The danger is that a little knowledge is dangerous, and that many people will go online and Google something and do things and think they know how to do it, or watch a 6-minute YouTube video and think they're an expert, So I've seen people do it as a lawyer where they draft certain documents for themselves that they really have no business drafting, but I understand why they do it. They do it because they don't want to spend the money, and I understand that people don't like to spend money if they don't think they have to. But then again, you're not getting expert or experienced advice. And sometimes when you're doing a deal or you're entering into a contract with somebody and you've drafted the contract yourself, you're going to leave out some important things. And when something happens, and something eventually will happen, it will cost you a multiple of what you would have spent just to take care of it in the beginning. I see it happen almost every day. And when I speak with other attorneys, the do-it-yourself culture that's out there is a little scary. Everyone says, there's these horror stories that people wanted to save a few $1,000s, and in the end, it cost them $100,000, to fight over something that was resolved early. So that's, it's a blessing and a curse, right? So if there is a curse of technology and the internet and access, that's the curse.
Yeah, I do agree with that. With certain things, I think it's best left to professionals, where it's like legal and, doctors and all that sort of like certain aspects of business and stuff, you should leave it to the experts that have,
I say to certain people, if you want to try do-it-yourself law, first try do-it-yourself dentistry. Tell me how it goes.
That is very true. I sort of want to jump back to real estate now from the legal side of it. What are some mistakes, actually speaking of that people make when they first get into commercial real estate? Is it not hiring the right lawyer for it? Is it, maybe doing it themselves and stuff? Or what are some unseen risks that, from your experience, that sort of, people that are first getting into it are maybe ignorant of, because they don't know they don't know what exists if it doesn't exist, right? So
I think the most important thing, if you're going to get into anything, is that you know what you're getting into. I think if you're going to, let's say I want to buy multifamily in Ottawa, well, I don't know anything about multifamily in Ottawa. Before I ever do that, I'm going to dissect that market and research it to death. I'm going to know exactly what it means to own multifamily. I don't know what the average rent rolls are. I know that what my annual increases can be. I don't know what my taxes are. You can look at something and say, oh, I'm going to make a fortune off this. And then all of a sudden you have to replace the roof and you have an environmental issue, or, your taxes are increasing because an abatement is ending. And before you know it, you're not making money. So whatever, be it commercial real estate, be it any business, be it any industry, whatever you're getting into, it's important that you actually know about it. If you're going to get into a certain asset class, know that asset class. If you're going to the hotel business, know hotels. If you're doing office, retail, industrial, multifamily, whatever it is, you have to know it. So I think most people, they jump at things they think are a good opportunity without researching it sufficiently. Now, you don't have to research it to death. If you analyze everything, you'll never do anything. If analysis paralysis, whatever they call it. But the thing is, I think people have to know what they're doing. And then, yes, you have to rely on certain people. You should have a good attorney, but not rely too much. I always say, listen, have a good attorney and a good accountant and a good title company, but make sure you read everything. Don't get lazy because you hire people. Don't not read a contract. Don't not understand the deal 100%, especially if you're raising money from investors. You better know what you're doing because you have a lot of obligations, a lot of responsibilities when you're taking money from people. If you take money from people and you don't know the deal and the deal implodes because of that, your reputation will suffer and people will know that. And investors will always talk about the deals, people who they think screwed them, even if you didn't mean to. So I just think that preparation is important and you should really know what you get into. And it's not quick and easy. In real estate, it's not a quick and easy game. You don't make money overnight in real estate. It's not like in, buying the right stock or buying Bitcoin and lucking out, time-wise. It takes time and you have to understand what you're getting into and there's a process involved.
Yeah, that was actually a lot of good points, and thank you for putting that out there. So actually, speaking of finding a good lawyer and finding a good team, what were some criteria that you would say to, screen for finding a good commercial lawyer for commercial real estate?
Experience first. Don't use your uncle. Somebody brought up this example at the panel last night. Don't use your Uncle Ned, who's like a personal injury lawyer, to do your commercial real estate closing. Like, use the guy who knows what he's doing. Use the person who does commercial real estate. You could always get referrals from people. I would, if you don't know anybody personally, then I would ask people. You're going to know people in the real estate business, and ask people for referrals. Speak to 2 or 3 people. You have to remember, it's not only that they're good, but you have to deal with these people. And hopefully you'll have a very long relationship and you'll deal with them all the time. You'll speak with them all the time. You'll have transactions with them all the time. You have to get along. You have to be on the same page. You don't want to be like, every time you speak to this person, like, I hate that guy or something like that, So, it's important that you find the right people and you rely on them. And there are many ways to do so, but first of all, they should be experienced and know what they're doing. And if you get referred by somebody who's used it in the past, that's probably the best thing.
Okay. Awesome. So, yes, we're coming to the end here. So do you have any future projects coming up or anything like that? Or where can people actually find out more about you?
So right now I have nothing that's pending 100% right now. I'm looking at a few things. People can find more about me. I'm on LinkedIn, and that's the best way to reach me. And if you want to talk to me, you can talk to Neil.com. I do these short calls with people free of charge. Yeah, everything about me is basically on LinkedIn. And in terms of future projects, I'm looking at a few things now. We're in a weird time. The problem now, with COVID, I would shy away personally from, unless you have unlimited resources, I would shy away personally from, let's say, retail, office. I don't know the story. Retail and office, I don't know what the story is going to be with those going forward. Multifamily, it's hard to find deals in certain places. Everyone's looking in Florida now. People leaving New York. So, but maybe the smartest money is the money on the sidelines. Also, borrowing money, financing is tougher now. The banks require more because they're scared. And I understand when you have uncertainty, that's when you have market issues. And we have uncertainty now. If you look at the stock market, you wouldn't know that. The stock market, it's ridiculous, on the upside. But there's a lot of uncertainty in the world. We have political uncertainty in this country. We have economic uncertainty. We have health uncertainty. We have, racial unrest. We have a lot going on. So is it the best time to invest? I don't know. Sometimes somebody said, you make money when there's blood on the streets. And now literally there's blood on the streets. But you have to know what you're investing in. That's the thing.
That is true. Well, thank you, Neil, for coming on the show. It was awesome talking with you and sort of picking your brain and getting all that amazing knowledge that you have. So guys, I highly recommend that you go check Neil out on LinkedIn. He actually has a lot of good information on his own LinkedIn website. And it was great having you on.
Thank you. My pleasure.
Awesome.